Hello. Hi, everybody. This is Mark. Welcome to the Monday edition of this Forex Wealth Builder course. We have 7 people so far. I'm a little bit behind, so I can't see everybody. If you want to just put your name in the chat box, it takes about 30-40 seconds. Hey, George. I don't think Peter will be with us on this session, but that's okay. Hi, Brad. Hey, Don. George can hear me loud and clear. Thanks for that, George. I appreciate it. Sergey, hi. How are you? Anish, how are you? Hi, HP. Zafar. So I'll give it a minute or two. We're just 1 after the hour. Just give it a minute or two, and then we'll, go through the paces. Got quite a bit to talk about. There's a lot going on in the markets as usual these days. We do have a Fed meeting on Wednesday. I don't expect them to raise interest rates, but the market will be keying in, as to whether they'll raise in March. And that's going to be a key thing as to what kind of signals, the Fed gives off. But, everything is in the markets, and so I don't think you'll see too much adjustments because of that. You may get some volatility on Wednesday, but I don't think you're going to see a big announcement. Hi, Dex. Hey, Trent. Hey, Naveed. All right, I think we have pretty good. I'll wait another 30, 45 seconds just to make sure that everybody files in. But good to have you here. I did send out a video earlier today on the Facebook. I'll put the video back up on the email tonight. I should have clarified this a lot earlier. I hate Sunday trading. I always feel like I make mistakes. Certainly, if you try and get in a trade earlier, you always get a head fake. So typically, I wait the first 3 hours. Usually, the first session is 3 hours, and then if I want to enter my trades, I then enter the trades after 8 p.m. Eastern time. And probably should have given you guys a heads up. So if you were, taking on that New Zealand trade that opened, lower immediately and then went higher, I should have made that clear. I waited, and then I put my sell stop, after the market went higher and got triggered in when it came lower. And so I'm still in all these trades from last night. So I put a video out. It'll be in tonight's email. And I'll also talk about kind of a concept of when to put these pending orders in, and then maybe when to hold back. So Sergey said, should we re-enter the New Zealand dollar, US dollar? We'll take a look at everything, Sergey. But to that end, let's just take a look at it. I kind of like this market. It looks heavy. If I was going to do one or the other, I think the Aussie looks, a little bit more heavy than the New Zealand. If we look at the Aussie-New Zealand relationship, it's pretty, staticky right now. There's a lot of back and forth, but I think over time the Australian looks heavier than New Zealand. So if you're short New Zealand, the Australian dollar, you should be happy with that. But, look, it's, you've got this double inside day bar. You've got this, huge bar here. And now these 2 bars are inside days. So if you want to wait and put a sell stop under today's bar, you could do that, Sergey, or you could start positioning yourself now, because I think it does look heavy. To me, this is a big double top. Last week's rally was, to me, just a short covering rally in what looks like a down or bear market. We could get a lot of static in here in a lot of markets. So, maybe not be an absolute clean shot. And like I said, if you're already short the Australian dollar, you may just want to, stay short that. It looks a little heavier. So I'll leave that up to you, whether you want to get in now, put a sell stop under the low, or just get in. I mean, I do like it short. That's up to you. But I'm sorry that you guys, for you guys who got stopped out early, I should make that clear from now on, and I'll put that in, the outgoing messages that, avoid trading in the first session of the, the Sunday opening. There's usually always a head fake there. So let's look at the other trades that are on. The big trade that I was really high on last week, of course, was spot gold, XAU USD. And, it's really following through kind of like, I thought it would. It's, slowly but surely just, kind of putting on this cup and handle kind of formation here. We looked at this, and this is kind of going up here, and now we're coming back to the recent highs here. So it cleared out these two inside day bars. I did mention that if you wanted to sneak in an additional, buy stop here, get aggressive, add to your position, not a bad idea. And now we're consolidating up here. And I wouldn't be surprised to see a bit of a thrust north now, and get into this white space a little bit. So it's behaving very well. It's consolidating. It's slow but sure, but it's behaving exactly what I thought it would. It's put on this double bottom. The neckline's kind of come in here. We had a retreat. Now we're consolidating up here, and so I like it for all the reasons we spoke about last week. So you should be short from long from last week. If you want to put on an additional long position, around here, with a stop under today's bar, I think that's not a bad idea. This thing looks like it's consolidating and still looking good here, and looking like it should get into this white space area. So unless there's any questions on gold, I'll just move on. Last night we also looked at the Australian versus the US dollar. Same thing, just as the same analysis for the New Zealand. I think this is a heavy market. Last week's rally was kind of like a dead cat bounce. We had this key reversal here, key reversal over there, this double top up there. And the market did get up and then triggered, it got to 70.31. I think our stop was 70.34. I'm still in this trade. So unless your broker has an inordinately wide spread, you should be also. And if you're not, I'm sorry about that. But I'm still in this trade, and it still looks like it's going to roll over and go back to the lows here. So that's Australian dollar, US dollar still looks lower. And I pointed out over the weekend why I was looking at that trade, in the analysis section. So unless there are any questions there, I'll just move on. We also took a shot. I typically don't like doing this, and probably shouldn't do this, where I take a limit order and try and predict where market's going to go up and stop. This market is kind of rolling over. I'll have to see where this market closes, but it still looks okay. We've got this kind of inside day bar where, if we tear through this on the low side tomorrow, we could be in. And maybe, a good idea would be to, I don't know, even put a buy stop just above here. The market could still go a little bit higher and then fail. So I'm going to take a look at this, and I'll put an updated stop loss and take profit for the Australian dollar, Canadian dollar position. We got short at 99.11. It's 99.20, so it's a little bit outside where we got in. So we're not getting murdered on this one. So it still looks like this thing could roll over. And I like this. Actually, on the long-term charts, it looks pretty heavy. So if you're short, stay short, and I'll give you an updated stop loss in tonight's email. What else? HP says, Mark, if you get the chance, can you talk about how to add on to an existing position, please? I'm new to trading. Okay, it's probably not a bad idea. I think sometimes I assume so much that I just, race past something. So some of you may have the same question. So why don't we just talk about that for a minute? So We got in the original position last week at 1096, I think, right here on this buy stop right there, with a sell stop, I think around 1091 or something like that. And so we're still in this trade. So if you took a 0.5% risk on this initial trade at 1096 with the buy, the sell stop at 1091, I'll probably raise the stop loss on that to maybe a hair under these two bars right here, maybe this bar here, which would be, let's just take a look at what that is. So likely I would put it a little bit under this bar, this inside day bar, 1092. So I probably still leave the stop loss around 1092 or so. People say, well, don't you want to break it to break even, bring it closer up? Again, if the market really fleshes out, or even under this, it's 1094, so maybe a hair under there, 1093, somewhere 1092, 1093 would be a good stop loss. So now, if you wanted to get long on this bar, which the high was 1103, let's say. So you get, now you could do another position with a stop loss, let's say at 1094. Again, you'd have to assess your risk. So if you took a 0.5% risk on the first one and you want to get it in on the second one, you might just take let's say a 0.25% risk on the new ad. And then the new ad might have a different stop loss, although it's so close in the same area that this, the stop loss would likely to be more or less at the same, area. So typically the add-on is usually when the thing puts on a move and then I see another spot to get in. This might be a little aggressive to put the second ad, but it's congested in here nice. It's taken out these inside day bars, so I could certainly see that because if we start clearing above this 1110 area, this thing could really catch fire and put on another move. So the way I would do it is if you have a 0.5% risk on the first position, you might want to put a 0.25% risk on another ad, with a stop loss at around the 1093, 1094 area. So if you want to get long, somewhere in here at 1105, and measure your risk at a 0.25% to, down to about 1094 area, then, that may be, advisable if you want to get a little bit more aggressive. So I don't know if that was a little bit more instructive. Again, I just go in second position with less risk than the first one. And then, understand if you get stopped out on both, you're going to, risk 0.75% of your account instead of the 0.5% on just one position. But of course, if it goes up, now you're going to get the double, bang from having both on. So hopefully that was a little bit clearer, HP. Moving on. You're welcome, HP. So what else do we want to talk about? Somebody brought up the odd yen last week, and we went through a discussion of he thought that it might be a good buy there, and I kind of thought that actually the reverse, and we're kind of seeing some price action to the downside with the Australian heavy, and also the yen, to my mind, is probably going to go stronger after last week's bit of a counter trend. So we're looking at the Australian dollar versus Japanese yen. I pointed out that I saw this as the heavier formation here with the kind of head and shoulders. We did break the neckline here, and now we had some snapback. And now we get a situation where we had a nice reversal bar there. We got into the same territory as this reversal, and now we found some headwinds with this inside day bar here right at this reversal area. And it looks like this could be a logical place for this to incur another level of resistance. So my inclination, we're already short Australian versus US dollar. So, this is an Australian, related pair, but, not entirely correlated. And I like this trade, put a sell stop right here under the inside day bar at this, resistance area in what I think is looks like a downtrend here. So like I said, I like to see an established trend and then build some energy away from that main trend so that, you know, it can open up the way to thrust down and, you know, wait for your signal. But we've now built this coil, we've built some energy away from this downtrend, and now this inside day bar to me suggests this might be a good place to, you know, put on a position short Australian dollar, Japanese yen, and I think I'm very likely to select this as a trade tonight. Again, if you're already in the Australian dollar, it's not entirely non-correlated. So, you know, if Australian dollar goes up, you're going to, basically, be in trouble on both pairs. But, I just got to follow the market and, just decrease your risk if you want to take both positions. But I think I really like this position a lot. I really feel pretty strongly about this. So, we have the pattern, we have a downtrend. Now we have this upswing and then a reversal bar within the cadence of this, this bear market, if you will. So to me, this is a logical place for me to enter a trade commensurate with my methodology and the way I see the markets. So if there are any questions about that, just present them in the chat box. So, I think, going through the trades, this looks like it's going to be pretty high on my probability list for tonight. That's Australian dollar, Japanese yen. Let's see, Anish asked about the Australian Swiss franc cross. So going one by one. We have this inside day bar in what looks like a kind of a downtrend here. And so this, to me, my mind, I could see this coming off. You got the reversal bar here. You got the same kind of build up here. And I could certainly see this coming off, into this area. But plate is getting pretty full, shorting this Australian pair. And I think I'm going to go with odd yen. We're already in odd US dollar. So while I think that I could, see the same relationship here, Anish, we could see a drop off here. If you want to take all three, you could put a sell stop under this inside day bar, and I think you'd be, justified in doing so. I see kind of a well-defined, channel here. We're at the top of that channel. Visually I can just spot it, but I'll draw it in here. So we've got this downtrend channel here, if you will. We connect these lines and you can see how beautifully it just kind of connects, and then you've got a similar thing going on here. So you've got a very symmetrical down thing, and now you're at the top of this channel in a downtrend with an inside day bar. So you've got all the ingredients here. So maybe it's a pick as to which is the better probability. I just have a feeling about this yen coming off here. It had a nice counter trend trade last week, and we'll talk about it. And I think we're going to go back into the trend here, stronger yen. So, it's I'll probably take all of the trades, but in terms of sending them out, I want to be a little bit more selective and not overwhelm people, with the Australian dollar crosses. And again, if it all goes against us, then we're taking a more risk piling into one thing. But it's that's a great trade. In my mind, short Australian dollar, Swiss franc, on a sell stop under this inside day bar tonight for those who want to be super aggressive and take a look at that. So thanks for pointing that out, Anish. So working our way down, we looked at the, odd New Zealand. I talked about, it's not a trade that I would take. I just look at it as a reference whether, I want to trade an Australian pair versus a New Zealand pair. And I think over time, we talked about this last week. I think that, to my mind, we're going to see ultimately the Australian move lower versus the New Zealand dollar. This is not an inverted head and shoulder in my mind. And so I like the Australian dollar versus New Zealand dollar. Short if I'm going to pick one pair over the other. Again, these yen pairs, I do expect them to start going down. I didn't expect this rally to continue. We talked about this huge downtrend. Markets just don't go up again against something like that. So now we have this inside day bar, and I expect this thing to come off. So, we're doing odd yen, this Canadian yen, like short for the same reason. I think this was just a counter trend thing, and I think we'll see a shot down here. I think all these yen trades you can short on rallies, going forward. So this is a good trade. This is something that I would look at. But we've got this odd yen, do I want to do CAD yen versus odd yen? I kind of like odd yen for different reasons. I'll stick with the odd yen for now. But for those who want to get in on this, this is to me a valid trade. You had a counter trend thing. I think you're going to top out here, and you're going to get a thrust down here, and it could get messy and play around. But I did not expect this just to go from here straight up, without some kind of doing some kind of work in this area, and serious work to turn that around. But I do think all these yen pairs are going to continue to the downside. CAD yen, Swiss yen, same thing. You got this inside day bar, and I expect it to keep going down. Copper, euro odd. I'm actually looking for a place to get short this thing. I think that you might see a head and shoulders here. We talked about this even on the 8-hour time frame. I expected this to get up into this area, play around, and then hopefully give us a signal to where it might be rolling over, because I think this thing looks heavy. But we'll have to see. I mean, right now I've got no trade. This is kind of a trade in the middle of the tennis court. It's not up, it's not down, and I just look at this and we just dismiss it. I mean, I could make a case that you'll see a thrust again to the upside, but then it'll come back in your face, and so nothing that suggests any kind of continuity here. Euro Swiss, it's kind of going up. I like that, just in terms of an uptrend, but not really a pair that I want to get involved with. Euro pound, we talked about this last week. I think that this probably signaled an end to the uptrend. I am going to look for a short. I just want to see this thing build away from the main trend, do some work in here, and look for a signal. So right now, I'm going to stay away from euro pound. Euro pound, where are we? So euro odd, CAD, we kind of snapped over that. So same thing. I expect euro CAD looks heavy now. Ideally, I want to see a snap back up into here. You could still see a big move up, but I don't know what it's going to do, how it's going to do it. So I don't have a high sense of probability here. You do have this inside day bar in an uptrend, and I sense that you could get an explosion up here, but if you don't catch it quick enough, it could be back down just as fast. So this is just a volatile market right now. I'm going to wait for this thing to settle out and give me a much more high probability trade before I kind of think about getting in there. There's other markets that are much more definable and quantifiable to me at this point. Pound, euro, yen. We talked about this last week. Actually, the euro yen is the only one that looks strong against these yen pairs. But I'm kind of looking at this guy right here, this reversal bar. To me, this guy is going to probably contain a lot of the action at around 129. We're at 128.45. So we may get a brief thrust up here, and then something that goes down. So we do have this double bottom down here, but it's kind of messy at this point, and I'm going to kind of stay away from these yen pairs, because I do think most of the pressure is going to be downward in these yen pairs, as just instinctively. So I'm kind of going to stay away from that. Euro New Zealand, kind of another messy pair. An interesting pair though, and I could definitely make a case for maybe a buy here. Again, these exotic pairs, are a little bit different than the traditional pairs. They're kind of make patterns all over the place, and so I could see that this could set the table as a double bottom. We had this neckline coming in here. We had to break back nicely, break out of the neckline. Now you've broken back to the neckline, and now you got a bit of a support here. So It's not ideal, but I could kind of see this thing kind of sneaking back up here. So, put a buy stop up here. Uh, you know, I could probably make a case for that. You do have this bar in the way here, the serious overhang, but I could see us making some good headway up into this area, consolidating, and then see how it feels up here. But I think it's a little bit less than the highest probability trades that we're looking at. Um, I could put it on the short list here. I could definitely see this thing back up to the 170 area, which is, a nice 250 pip move from here. And then, in my visualization process, could I see it just, closing up here and then going down here? I mean, these markets are going all over the place. So, it's, you can see something like this happen, but it's not really the same visual to me. If you put a gun to my head, I would say we're gonna, see at least that. So I think, this thing is going to go higher, and, we can talk about that and see what's left by the end of the day if we want to, take this trade. So that's Euro versus New Zealand. Let's see, Euro USD, same kind of thing. We've talked about this trading range. Again, this inside day bar, traditionally I said, you would short this thing, but then you've got this price history here containing it, and as you broke under it, so you've broken back into the range. And that's the problem with range-bound markets. They break up, they break down. This is a very narrow range, so you kind of want to stay away. But this thing down here, at this thing, this may be setting the stage for a stronger Euro move, which in that case, the Euro New Zealand might be the way to go. So if I'm going to look at the Euro long, I would, like take Euro versus New Zealand versus tangling with this kind of mess here. So nothing for me in the Euro versus US dollar. Working our way down, GBP odd. Again, this is a downtrend. I still see this thing as going down. I don't see this as a double bottom. So you might go a little higher and then get another short sale here. So nothing to do for me in this market today. GBP CAD. We've got an established double top here. I'd be looking to short this market. We have this inside day bar. So, what I'd like to do is see a little bit more work away from all this price history here, kind of come up in here, see a failure, and then, see this, this thing, bounce up here, coil, and then take that down. So right now we have an inside day bar. I don't see this thing going straight up against this wall. So even if you do get a bounce up here, it's likely going to come back in your face. And so I'm not going to tangle with GBP CAD for the moment. Where are we? Pound Swiss. Kind of same as odd Swiss, although I much, if you're going to do some, counter reversal against the Swiss, I'd like odd Swiss versus this, although I could see this is in a bear market. I could see this coming off, but, you've got some support here. So if you're going to do, a pair against the short against the Swiss, I like that odd Swiss much better. It looks much heavier to me. Let's see, pound yen. Kind of same thing. I see these yen pairs going lower. This is the weakest one. This inside day bar at the top of this little channel. I didn't think that this would continue higher for much longer. And I do think this thing's going to come down. I would like to see a little bit more of a build away for this to fall. So I think the odd Swiss to me looks like it's got more of a coil, more of a build out, and I like that better. But I like all these yen pairs lower, and we'll talk about the yen in a moment. Pound New Zealand, still lower. I got this inside day bar. I'm not going to go long here. I don't see this as a double bottom. I don't see any thrusts off the bottom to suggest that you've got meaningful bottom here, whereas I do see these thrusts down, these key reversals. So I think the cloud, the overhang in this pair is much more forceful than any support under here. So I'm expecting pound New Zealand to keep going down. And I mean, we could put a sell stop under this inside day bar. If I'm going to do that, I prefer the close to be closer to the low than the high when I do that. So for my mind, I'm just, it's kind of messy at this point. There's a lot of support in here, so I'm just gonna stay away from pound New Zealand for now. Pound US, you know, I could see a little thrust down here, but you got the support of this reversal bar, so it's nothing clean. You've had this huge move down, so I would prefer to see a little bit more of a coil, a little bit more of a build out, a little bit more of an energy before it, was going to put a second move down. But we could see a huge thrust move down, and I wouldn't be surprised. But on a risk reward basis, it's not there for me at the moment. These are the stock indexes, which I see that there's kind of an inside day bar here, and I think that I would be inclined to go short tonight. These stock indexes, they're in a well-defined, you have this triple top up here, a nice defined downtrend. You had the snapback at the support line. Now you got this narrow range day bar, key reversal, and my inkling tells me that we could be setting the stage for another move. What I don't like is that I try and picture in my mind this history coming down here, and you've got all this stuff here. So what I like to do is see a little bit more of a build away, and you could get a false breakdown here and then up. There is a little gap here. So now that I think about it, and let me kind of discuss this in a little bit more detail. So this does fit a conventional signal where you kind of have this key reversal inside day bar, and then you have to picture the move when it does this coming down here. And it certainly could do that. I mean, we do have all this history right here to the left that it's got to clean through. So if this is going to come off, this has got to come off big to clean through this thing and keep going down. My concern is when you have just all this congestion here, that you may just still need a little bit of a kind of a build out here to then build away, to then fall, create some space, if you will, to fall more. So a little bit conflicted here, only because I do see this gap right here, and I'm not sure whether the market still wants to come in and close that. So let's look at some of these other stock indexes. They kind of look the same to me. So that was the NASDAQ. This is the S&P 500. And we've already started the next session. That's kind of why you see that here, just on these. So it's already cleared this daily session in the next session. So I don't know, we're a little bit close to this history here. So unless we get a huge day when we fall here, I would like to see just a little bit more price history here. So I think I'm just going to stay away from the stock indexes for now while I look at it. We'll look at the Dow Jones, same thing. I mean, you do have this inside day bar, these reversals in a downtrend. So this does look ugly, and the Dow looks probably more tempting than S&P and NASDAQ now that I think about it. And by similar thing, I can't see this thing going up. I just can't picture this thing going up here. So if I had to put a bet on this thing, I think that we might get a continuity move here. But again, keep in mind we've got a Fed meeting on Wednesday. You could see some volatility in a lot of these markets. So I'm just going to stay away from the stock indexes from now. If you guys are ultra aggressive and somebody wants to take a position short, I could certainly make a case for that. But you've got all this price history and support coming in here. You've got to clean through that. So I would be inclined to wait for a little bit more price history to get maybe a little bit better trade there, because you could get a big move down, then a key reversal up, and if you don't catch it right, then it's going to be back in your face pretty quickly. So I'm going to stay away from the indexes for now based on that. New Zealand dollar CAD, got a little complicated today. That was rolling over. Now we get a key reversal in an uptrend. But now this is where you're fighting a couple things, creates conflict in my mind, and I guess where there's conflict, you just stay out. So typically in a key reversal, in an uptrend, I would just say, on a knee-jerk basis, I'd want to go there. But then you have to picture in your mind, if this thing cleans here, is this going to go straight up against this wall like this? No. It would require, a couple of bars here to create some space to go up. Then you have, these guys sitting here at the top. So now it's a question, are these guys, going to win out, or is this inside day bar, this key reversal in an uptrend, right at a trend line, going to dictate. So I'm just going to stand aside and, watch the fun and let these guys fight it out and see, which side wins. But my instinct tells me that it's just not going to go up here, so that even if it's going to go up, we still need to do a little bit of work to create some space here so that we can go up, put another bar here and then whatnot, so then even a little bit more distance away from this so it can work higher if that's what it's going to do. But I think this is such an overwhelming bar. To clean through this is going to be very tough. So I'm still more inclined to think that this thing's going to go down, and but we got this reversal in our way, and so just going to stay out of this for the moment being and see how this plays out. Be very curious. New Zealand dollar yen, same thing as odd yen. You've got some great signals in this tonight too. Again, I think all these yen pairs are going lower, so now you just need to pick which one is likely. I think the Australian and New Zealand pairs look much weaker versus European, the euro, the pound. Canadian dollar is even a little bit stronger. So I think if you're going to pick, if you're going to go short against the yen, I think the Australian and the New Zealand are the ones to select. And then I think the Australian is a little heavier than the New Zealand, just because I'm looking at the monthly, although they may fight it out and one may be stronger than the other in the short term. So you may even want to do both. But look, I love this. What we're seeing today, you've got this outside revert, you got this key reversal here. You came pretty much in the same neighborhood as this. And now you have what I call an outside key reversal, where you took out both the high and the low of the previous day. You're closing on the low. And so this is kind of a go to the bank, kind of trade here. You've got all of this stuff. And so you just have to step, kind of put your stop loss outside some of the noise. And in a case like this, I wouldn't even put a stop loss, to tell you the truth. I don't think, if you come down here, that you're going to go and take this out. So I kind of think, when you see these things, it's a free look at the market. You may not get, huge thrust down. You may get it down and up and play around, and may not go anywhere. You may, not, just, lose a little up here. But to my mind, when you see something like this, two key reversals, an outside key reversal in an established downtrend, this is kind of a go to the bank scenario, and you definitely want to be a part of this. So it's a question of, do you take Australian yen or New Zealand yen? And let's just take a quick look at the Australian yen, see that picture again. It's the same kind of thing. Actually the New Zealand looks a little weaker. And now that I look at it, the New Zealand yen kind of, they're both going to probably come down, but I think I really like the spacing of this New Zealand yen a little bit more, the spacing and the reversals. So, you could take a 1/4% bet on both and do both. And, that's how I'd probably play it. So, we can talk about the stop loss. What I would do is I'd put it probably about 35 pips away from unchained. So we're 76, 50. So like call it 76.85, which may be arbitrary. I could see this thing kind of coming and, up into this bar a little bit and, clocking you out. And that's why I don't even like putting stop losses. I don't put a stop loss on, and I don't want to get you guys in, bad habits here. But when I see something like that, I, pretty much feel comfortable that, I'm going to be able to assess the risk and, give it some room. But, I would say a good place for a stop loss is around, 35, 40 pips higher from here, 76.85 or so. And so while I'm looking at this thing, we're already short Australian versus Canadian, already short Australian versus US dollar. So, a good diversification, non-correlation would be, I would go New Zealand dollar versus Japanese yen for tonight's trade, right under tonight's low. And this looks like a money trade to me. The thing is, we are a little bit close to this in terms of a spacing. That's why I think, we could still get up here and it wouldn't mean much before it comes down. We're a little bit close to this thing. We may need to, build away before this thing completely collapses and create some room so this can collapse away from this thing. But I think, you're looking at a top in this area. I don't know what the price action is going to be for the next couple of days, and certainly Wednesday we've got this Fed thing, so you could get some volatility in and around here. But I think that this is a top right here, and we're just going to head lower from here. I actually did a video, probably on our website, on this particular pair. That I just think on the weekly and monthly, this thing is looking like, we've got this head and shoulders up here. We kind of got up here, and now we, hit this key support area, and now I think we're going to retest. This is a weekly, this is the monthly, and you've got a head and shoulders on the monthly. You've got this support here. You've got this, gap about 500 lower. So I think over time we're going to, roll over in New Zealand dollar, yen, and come back into somewhere into, this white space here or much lower. So I like it, New Zealand dollar, yen for tonight. We talked about the indexes, USD CAD, which is of course a big pair. I did point out in the weekly video last night, I found a really cool chart, a 30-year price chart of the Canadian dollar. I don't know if you guys saw that or we talked about it last week. I think we might have even talked about it last week. My memory's not so good. So, here's the Canadian dollar. Let's blow this up a little bit. So you can see how it got to a natural resistance point, last week, right here, right at about exactly the same thing. So this was a logical place for it to, find key resistance. And then, the question is, do we play around here and then keep going up? Or is this, a top and we start finding our way lower? Either way, I think this is a long term. This is a 20-year chart. This is a 5 or 10-year resistance area. So we're not going to take this out, anytime soon. So we're going to play around. And for the moment being, I think the Canadian dollar probably goes a little stronger. And that's going to be my assumptions going forward. So I think dollar CAD, goes weaker. We do have a thrust up, which again, is within the structure. As you guys heard me say last week, I didn't think we'd go straight up and then straight down, and we went down a lot more than even I thought we would. So I can make a case that we're going to get back into this area. And then, I think it's just going to be messy for USD CAD. It's not a pair that I really like to play with. And so I'm going to look at Euro CAD, GBP CAD, and look at those, to short rather than dollar CAD. If I'm going to do, one pair over another. But I think for the now, CAD has, the arrest has been made in the slide. When dollar goes up, Canadian's been going down, and now the reverse is happening. Canadian dollar is strengthening. And, as this process continues, I'm going to look at some other pairs versus Canadian dollar. Let's see. Sergey says, can we have a look at GBP USD? I think we talked about that, Sergey. I don't know if that was sufficient for you. It's we have this inside day bar in a down thing. I certainly could make a case, and I think this you certainly could get a 50, 60 pip pop here if you guys want to do that. and watch it and put, a limit at, 25 or 40 or 50 pips to capture just a move out of this little inside day bar, I think you'll get it. But you're pretty long in the tooth in this downtrend. And I think you're going to get some volatility in this area. So even if you short it, I would expect some snapback. And I wouldn't know where really to arbitrarily put a take profit somewhere, in here. But I'm going to kind of stay away, but I can certainly see this thing's going to come down. It needs to consolidate these lows, even if this thing were going to turn around. So I certainly see this move as opening up a move to new lows. And then this bar should, start projecting that we're going to start finding a low somewhere in here. I expect that we, given the extent of this thing, we're going to take this thing out by a little bit, maybe get down into the, just close to 140 before we see the next reversal. And then we've got some spacing away from the downtrend to maybe turn this thing around. So I do think that this inside day bar can pave the way for a new move lower. I just think with all this price history, I'm going to kind of stay away. We've got so much on the table already. We're short, a lot of trades already. We're long the gold. We're looking at New Zealand dollar, yen. So that puts us into 4 positions already. And so if you guys want to do some of these things, you certainly can. But, for my traders, I'm going to, not put that out tonight. But that's part of the advantage of being on the inside. And certainly I could make a case that, I can't see this thing going up. So I think your risk is very small of taking a short trade in GBP USD right here. ATC is a little bit different, the long-term chart USD CAD. AT, what do you see versus what I'm seeing? Trent Johansson says, where would you get in on New Zealand dollar, Japanese yen? Right under the lows here. So we're pretty close to the low. We're still about an hour away from closing here. It's 76.52. The low is not too far away. So I would do it right under the lows, Trent. Let's take a look at where that low is. So here's that, unfortunately, so the low is 76.46. We're trading right on the low at 76.52 right now. So, 1 or 2 pips under the low trend. I'd say 76.45, 76.44, somewhere in there. And then with the buy stop somewhere around, let's see if it closes at 52, around 87, 76.87. So go short 76.44. Buy stop 76.87, so you've only got a 43 pip risk there. But I'm actually going to probably even stay away from a stop loss there. But that's how I would construct that trade for tonight, and I really like it. So you guys can start getting short here. Let's see. Sergey says, okay, we've already. So Kaz, can you clarify your exit strategy, please? What do you look for when exiting early? How do you adjust the stop losses for open trade? So, Kaz, I really just, it's really the exit strategy is a little bit arbitrary. It really depends on the market environment. If we're in a choppy environment, my take profits are going to be much shorter. Whereas, like gold, I kind of put an arbitrary thing, and then if it keeps going higher, I'm going to keep moving it. So now we're making a new high in gold, folks. I see we're moving to the top here. We're at the top. We're at the high of the day, so it's really supporting all the analysis we did. And I can see it moving up into this white space. I put a very short take profit right here at about 11.20. But frankly, I'm going to keep moving it higher because I can see it, getting into this white space 30, 40, 50, 60, 70. I'm going to, as long as the price action, keeps supporting. And then if we get a key reversal somewhere here and the market tells me that we have a short-term top or a top that, hey, this is it, then I'll, take a look at that and make an adjustment. But, I just want to let the market tell me where it wants to go rather than me kind of come up with some arbitrary thing. This was arbitrary. I think, last night's stop was 11.23. So if we got some huge move, that would have been great to get taken out of. but I'm going to keep slipping it out, maybe putting it 11:28 tonight, 11:32, somewhere up here. Again, probability, is going to be outside of any daily range, but I want to, see the market, if this market goes up 15 bucks and then close at the high, then I'm going to move it higher and just, let the market adjust. We got in short right here at 11:52, kept on adjusting, the stop losses, the take profits, and eventually got out all the way down here. So the market, and this was pretty arbitrary. I got out just because I saw all the support in this area, and I said, okay, let's just get out here. And I could have stayed in and taken a little bit more out of this market. So I actually got out a little bit too early on that trade. But we still took, 470 pips out, so can't cry too much there. So kind of looking, yeah, gold's making a new high right now. It's over the 1108 area. So we're, going, my equity's making new highs tonight while I'm looking at it right now. And let's see, the odds going lower. So everything is, looking bueno for the trades so far. What else? So I don't know if that, Kaz, I'm sorry, I can't be more definitive. It really depends on the market environment. Sometimes I'll take what the market environment will give me. If it's choppy, low volatility, then we'll take 50 or 80 pips. But this is a great environment where these moves are extending for hundreds of pips. And I want to take, good moves wherever I can see them. And let them extend to the point where they're going to tell me they're going to reverse rather than somewhat arbitrary. So sometimes I'll intentionally put a take profit, folks, outside of what I think will be the daily range. I mean, full disclosure, when I put this take profit on Euro New Zealand, we got in right on this move right here, this key reversal. I think it was 166.87, and I arbitrarily put a take profit 300 pips higher, 169.87. Never thinking, the next day that it was going to get there. It got a hair over that, and then reversed 180 pips. We got out clean, and it turned out to be a beautiful trade. And I wish I could take all the credit for it. I never thought it would, hit there right away. I just wanted to kind of see how the market behaved. I thought it would get up in that area, in 2 or 3 days. It got there in a couple hours, and then we got out clean. So sometimes I just like to give the market room to see where, it's going to go. On the take profits. So sorry, I can't be any more definitive about that. It really is dependent on the market we're looking at and the market environment per se. So that's it for now. You're welcome, Kaz, for that. Any other questions? Let's see, anything we've left on the table. Oil, I think, is reversed down again. Huge bear market, beautiful key reversal. So this is over. This is just setting the table for another move lower. It's going to take out these lows. So this has opened up a huge move for oil to probably go back to 25 bucks or even lower. And for those who are aggressive and want to take an oil trade on top of all the other stuff we've got on the thing, this is it. This is taking all the risk out. And yeah, you could get up in this candle and it's a huge, it's a huge bar. So you've got probably, 200-300 pips here. But you're not going to get higher than this, and this has set the stage to open this market for new lows, in my humble opinion, just like this, reversal here did. So, again, the markets point to where they want to go. You don't have to be a genius. They point to where they want to go, and you just need to get out of the way and follow that. Dave, do you watch them intraday or just at close? I do watch things some intraday if I do got some confusion, but it can confuse you. All full disclosure, I was looking at gold. There were a couple of 8-hour reversals on the gold chart that I could have made some mistakes, and several times I wanted to get out because I saw these. So you can see them pretty clearly here. You've got an 8-hour reversal here. You've got an 8-hour reversal there. So, what you want to see from reversals is follow through. If that was a real good reversal, you'd want to see this kind of thing. And then if this started rolling over, then this would look like a top. But again, even 8-hour is a pretty long time frame, but even that can be too much to watch too closely. So I think you stick to these daily things. Are you going to be perfect all the time? Probably not. If you watch something on the 4-hour, could it have alerted you to something? Sometimes it can. And so these are the kind of conflicts that I go through. But the bigger the time frame, you wipe out more noise, you stay more objective. And that was the thing I really talked about a lot last week. And the whole purpose, and the whole title of this thing is creating confidence before you make a trade. And this trade, gave me so much confidence, even when there were a lot of headwinds. When this failed, and we had a failure in here, I kind of second guessed myself, but I always came back to the fact that, we had this double bottom here. We penetrated the neckline, kind of came back to it, and then we formed this, cup and T handle thing, and all these things, and I think when I put out a late call. If you remember last week, I was kind of second guessing myself. Do I want to get in? Do I want to, give this thing? And I said, there's enough good stuff here that I want to be in this trade no matter what. Even though I've got all these things, the 8 hours and all these bars, this noise in here, you got to look at the major, formation that's going on here. Stand back and be objective. Look at a more longer term thing, eliminate these, so the closer you get with a, 2-hour or 4-hour, whatever time frame you want to drill it down to, you're not seeing the real picture. Now, you stand back, this is the real picture here we're looking at. The double bottom, the T hand, cup and T handle, the penetration above the neckline, penetration above these inside day bars. You've got so many things that, suggest to me within the confines of my methodology and the way I look at it that, you've just got to be in this thing. And I could have gotten out of this thing 100 times. Last week there was some news, I think on Friday, where you had a sell-off. You had a sell-off on Friday. This kind of looked bad. And all these things kept on coming back, in your face. But, I think that's what gives you strength and confidence when you're looking at a formation and a pattern that, above everything means more than any other little jiggle, intraday. And that's the thing about the markets. They'll give you so many head fakes, so many looks, so many announcements, so many news releases, so many opinions in the forum, that you'll be buffeted back and forth. And, and if you don't have a conviction about something, and if you don't have a methodology that gives you that conviction, you're always going to be, unsure and buffeted back and forth. And, I can defend this position, to, anybody. If we lost in this thing, I would still be able to lay out a good defense for the way I saw this market. And fortunately, it's really corroborating everything we were talking about, all last week when we were still looking at this market down here. It's now incrementally, it hasn't been, but this is all part of the build out that I talk about also, that the market just doesn't turn around and go up, from one direction to the other. So when it does all this work, if you're unsure, that work, quote unquote, can be very unsettling. But to me, it's just building away. It's putting more distance away from where, it sold off from. And the more work it does here, the more power it's going to have to then put on even a bigger move when it does jet out of this area. So, we've talked about this 100 times. Here's the double bottom, which, by virtue of the name in there, it's a bottom. You have this, cleared the neckline. You had the snapback. You had this cup and T handle. So there's 1,000 things. And as I said last week, there's so much good stuff going on here that I just want to be part of this trade. And now it's, making everything worthwhile. I did get on a second position at 11:06 this morning. So now I'm doubled up here. And so my equity's looking, really good at the moment. Everything's going, the Australian dollar is going profitable. The New Zealand dollar is just about flat. I'm losing 3 pips on that. And even the odd CAD, which was, a loser's, only up 11 pips over where I got in at 99.11. So, everything looks good for all the analysis we've been doing, and, how we've selected all these trades and the trades we've eliminated and the trades we've come up with, so far, have kept us out of some good trouble, a lot of volatility, and put us in some pretty good trades there. So Don says, how many of these trades will you be doing for yourself tonight above and beyond our daily recommendations? So that's a good idea, a good question, Donna. I'll drill it down, and, I'll take some small risks, some small nibbles. It's not really what I look at Euro New Zealand, but I think just for my own satisfaction, I'm going to try this one out, and it's actually getting even higher now. So euro looks like it's going to be stronger versus US dollar. In some other currencies, New Zealand dollar looks weak. So this isn't your typical inside day bar or anything, although it is inside this thing. I'll probably take a quick shot at this thing, although again, you've got this quick wall down. You're not going to put a huge wall up. So on second thought, I'll probably just stay away. I've got enough on my plate. So while I'm looking at this thing, Don, I'm probably just going to stay out of this, even though I have a sneaking suspicion you could have a nice 100 pip move, here. But you've got all this resistance here. This is the overwhelming thing here that's going to be in the way of this pair. So even if this thing, this thing's probably going to be a pair to stay away from for quite some time, unless we start getting up in here, and then this double bottom now looks like a double bottom, and we can get a clearer signal here. So I'd probably want to wait for a clear shot there, even though I think we're going to get some, but I've got so much on my plate, so if I do something, I'm not going to take that for right now. I really like this New Zealand dollar yen, which I'll put out tonight. We're really trading all the way to the lows right now. We're settling almost still right on the lows, so we're going to have to wait an hour to see how this thing closes. One of the concepts I talked about in my video tonight was, and again, I don't want you guys, having to watch the screen and micromanage and whatever when you do this, but one of the things I don't like, and just to give you an idea of how I view structure, is, so let's say it closes here, and now my pending order is just right under here, and now it immediately goes lower. It starts and then it immediately goes lower, without kind of getting into here at all. That usually unsettles me. Whereas you don't put any price history above unchanged, or you don't put any price history above here. So ideally, if you get this thing and we're trading right at the lows, and then the market really opens at the lows, sometimes, like there was one trade last week where I think in GBP odd or New Zealand, it closed, and then from the close to the opening, it just went, boom, to the next thing, and then it just kept going. And some people would have missed that if you didn't get in right away, even if you sacrifice a couple of things. But typically when you see something like this, it then shoots back up because it wants to do more work, up here. So I always like to see the market close not so close to the very, very low and then open right under there. I like to see it maybe close, just a hair above, the low, and and then and then even move higher, because what I want to see is it move higher and then confirm my stops. So again, I don't want to confuse you. I don't want you guys sitting around your screens, but there may be certain times where putting in the pending order, you may want to just hold back a hair, and the times are where you see it close at the very, very low, like this bar like did right here. And I'm sure it probably might have just opened under here and then snuck back up here, and then it was confirmed. But I hate to get stopped out on something like that. So but either way, I think this thing, even if it sneaks back up here, it's probably not likely to sneak up very far before it fails. So I feel pretty confident about this. I just wanted to kind of have a little bit more discussion on, kind of timing of these pending orders, from one session to the other, where it closes right there, then it, opens, in the other one, and then it doesn't do any work, in the previous bar. Because, you see even here, even though, it did go lower, it, put on a little bit of work up here. And this was kind of the same thing as, like, came in here and, maybe just went up there, but then it went. So I don't want to spend a lot of time doing that, because over time it'll all work out no matter what. And I don't want you guys just micromanaging it, overthinking it, and getting out of trades that potentially could be profitable. So just put your pending orders in, when you see them, and it should be okay over time. Let's see. Any other trades, any other markets we didn't talk about? Zafar says look at New Zealand dollar euro. It's not really on my screen here. I'll have to go to my instrument panel and check that out, see if we can find the New Zealand dollar versus the euro. It's kind of the inverse of the euro New Zealand dollar, I would imagine. I don't even know if it's on my instrument panel here. I don't see it there, so I don't have it. Let's see if it's on. I ticked out of NetDania by mistake. So I'm not going to look at that right now. It's kind of the inverted of that. So I don't want to have you guys wait while I download this again. Sorry, I must have, here it is. So yeah, if you get to NetDania, what you can do is you can come right here to this little button right there, and then unhinge it from this thing so that you can have it out here. And then if we go to the instrument panel, let's see if the New Zealand dollar euro is even part of it. I don't even see it there. So it's not even offered here. So it's a very exotic pair, Zafar. So I'm not going to look at that for now. What else? George says, hi, Mark. I sent you an email reference homework. Do you have time now? I think you said something about the Swiss franc, George. I'm sorry I didn't get to that. I was going to, get that last. So George says, my analysis is price at 101.33. I don't know if that's on a limit. Following higher lows, and we didn't talk about dollar Swiss, and actually that's a chart that I think I like tonight too. On the daily and weekly, it looks like it's going to continue bullish trend higher to 133, long-term potential. Yeah, so we didn't cover that, and I was gonna cover that last. So George, sorry about that omission. Thanks for bringing that up. And I actually like this as a long trade. I think I concur with you, George. So actually, we're turning down here. So right now, I thought this was an inside day bar, was, closing toward the high today. I was going to say if that closes toward the high, looks like it's going to continue high. It's closing on the low. So I'm going to stay away. I don't see this as a short trade. Again, part of my visualization process is I picture the price history going down here through all this price action. I don't see it doing that. I could see it actually taking out the low and the high. If you want to sneak a buy stop in case something happens, where you take out the low and high of something like this, because I definitely see, George, as you say, it going to 133 again, and could certainly make the case. Right now, it's just kind of, I guess, in more of a consolidation mode, more of a, like the euro. Just this could be the upper part of a band. So I thought if it closed, toward the high, I would put a buy stop up there. Since it's settling toward the low and we have so many trades on our plate, I'm going to stay away from that trade right now, George. But this does look like it wants to go higher, and maybe the Fed Reserve meeting on Wednesday is a catalyst for dollar turning higher again. But for the moment, I'm going to take this off the menu for tonight's trades. Let's see. You're welcome, George. Let's see. Zafar wants me to, I think, focus on this pair. So let's click on this and see what this looks like over here. So the New Zealand dollar euro to me has a double top, We have this reversal here. So just like the euro versus the New Zealand dollar looks higher, the New Zealand dollar versus the euro looks lower. So it's really just the inverse of what we were looking at. You have all this price history here. So I could certainly make a case for, again, this thing coming in here, but it's all over the place. And I'm going to stay away from that for now. So thanks for submitting that, Zafar. Kaz, would you exit the odd CAD or wait for further? Good question. I was kind of wanting to see, I was waiting as close as I could to the close to see what's going on here. This could be an inside day bar, in which case we could fail. I could also see this thing going higher and then going lower. So my inclination is, is to maybe keep the stop where we had it last night. Let's see where it's 99.29, maybe 35 pips higher from here. So about the 70 area. I could still see this thing going higher and then failing. So for right now, probably want to stick around this trade. I can't really make a case for this thing going straight up, certainly. I can't see a sustained move higher out of here without kind of doing more work sideways. So it's not a great trade. Again, these limits are not something that I typically do. I just thought if this thing rolled over, I'd want to be a part of it and still do. So I'm inclined to just, stick to it and put a stop loss a little higher. If you guys are queasy about it and you want to exit and we can look for a better trade, and that's probably what I should do. Maybe get short under the, today's inside day bar low. We can always, do that. So my inclination is probably put a sell stop still a little outside today's high, give it some room and see if we, can't roll over there. Let's see what the intraday tells us here on the 8-hour, the 4-hour. So, see this big 8-hour, hook down here. It's kind of, you can make a case that we're double bottoming there. 4-hour. Looks heavy. I mean, all this price history looks like it's going to be hard for this thing just to march through that. So, I think we talked about it last week where we're kind of come up to this neckline. We had this 4-hour failure here. So I would be inclined to get out a little bit above here, which is what, 99.40. Give it a little room above there and, just get out if it gets, above, say, 99.60 or so, about 30 pips higher from here. So my feeling is I'd like to give it just a little bit more room. It's not a great trade right now, and probably in hindsight shouldn't have put the limit there in the first place. So if you guys aren't comfortable, you can get out now with a 20 pip loss and just scratch it and take another look. I'm going to stay in and give it a little bit more room here, see if this double top's going to work out. But this, this key reversal here is, kind of holding down the fort, and we'll have to see if that gets taken out. So kind of ambivalent at this point. We'll have to see. So anyhow, gold trade's looking really well, and making up for any odd CAD mistake that we make here. Let's see. So hopefully, Kaz, I'll put an update in tonight's email, or if you just want to scratch it, you guys can just get out now. You're welcome, Kaz. Anything else we haven't covered or you guys want to talk about for tonight? So are you guys all still in gold? Are you guys all trading gold? If some of you guys in the US aren't, just because you can on your broker. I have a broker in Australia that's fully regulated. If you haven't done so, just you can sign up through the link on the daily email, or just give me a shout at mark@thepatterntrader.com. So Kaz says he's long gold. Good. It's looks like it's going from strength to strength here. And what else we got? Okay, Don's got both positions on. Okay, Don, for for both of us, I hope we see blue sky here, but I have a feeling this is starting to look pretty solid. Let's look at some of the other metals just to see what the divergence looks like. So silver, still a mess, still hanging out at the bottom where gold is now far off the bottom. So we have a nice little bullish divergence there. Platinum, wow, see we had a huge spike today. So the metals are incrementally turning around, but gold is still the strongest of them all. Copper, still languishing. So, gold by far is, looking the most robust. It's cleared out the lows and now it's, on new weekly highs almost here. And looking like it's going to close pretty strong into the resistance area here. So I'm expecting some good follow through. Again, I just don't like to see moves from a something where you don't have a key reversal. You've got, move out of this bar right here and a move out of that bar right there. So, we may get a thing where we thrust up and then reverse lower. So, Don, just keep your risk pretty close on that second position here. But it looks pretty good. And Trent says he's into both positions also. So I guess we're all gonna go up together or down together, and then you'll send an assassin out to get me here. So all right, anything else, guys? Any other charts, markets we haven't discussed, or anything you want to discuss in further detail? So I think what we came up with today, I'm still short AUD USD. I'm still short New Zealand USD. I'm still short AUD CAD. I'm long XAU USD. 4 positions. And I'm going to add a fifth just because I like, we didn't talk about the yen. Okay, so, I think my suspicion is we had this weekly move up last week, in the yen. I think it was a false move. We have this head and shoulders. We had this support at 116. You had this weekly reversal, but I didn't think we were going to continue up just straight up. We're already starting to see some headwinds here, and my sneaking suspicion is we're going to move down dollar yen. So the yen's going to strengthen, and that's why I think that all these cross pairs are going to go lower. Pound yen, Canadian yen, New Zealand yen, AUD yen, and then you just have to look at the weakest one. And to me, AUD yen, New Zealand yen are fighting it out for who's going to go down quicker. But I do expect the yen to strengthen and all the pairs that are weaker to go down against it. So that's why I think that this is an inside day bar. We could add like a fifth position and go short here too. I think I'd be inclined to sell dollar yen under this this inside day bar also. So if you wanted to add that to the menu, I can certainly make the case. But to me, just by the aesthetics, the structure of everything, this New Zealand yen looks pretty good to me. You do have a little bit more build away in the dollar yen in terms of just the price action away from this main wall to fall now down against. So you almost have this reverse symmetrical triangle that I kind of am looking at while I'm talking to you folks, where you kind of have this look that's going on to me right now. And you're right at the top there. So like I said, downtrend. I think this 116 is coming out, and you just need to build away from this thing, coil, which we've now done, and now I expect the yen to get stronger and these yen pairs to get weaker. So hopefully that clarifies things for you. Today, AT says, Mark, today looks like a holiday in the US because of the blizzard. Yeah, I guess life, still goes on, and these are big markets, and I don't know how much was held up or wasn't. I mean, we're still getting some good moves in these markets, notwithstanding. So that may or may not be the case. Um, so that's it. I really like these yen pairs, to go weaker over time, and I expect that weekly, inverted head and shoulders to get taken out. I said a long time ago I thought the dollar yen could go down 1,000 pips from where it was in November, and we've about 500 pips from there now, and we could go down to this 112.40 or lower. So this is a really nice inverted head and shoulders position, the double top, nice neckline at 116. So 116 is going to be a terrific call now to get short, and will be a good proxy on what the yen's likely to do out of this major topping formation here. Monica, hey Mark, do you think Bank of Japan might start the bearish move on Friday night? I really never like to anticipate what central bankers are going to do or not do. I look at the price action. To me, it's pretty much baked in the cake. This is a bearish technical thing. I look at patterns. The markets are well ahead of the news. They're discount everything in its infinite wisdom. So what it does or doesn't do, to me, it just supports the way I look at markets. And if I'm wrong, I'm just going to get out with acceptable risk. And so I try not to, it's above my pay grade to outthink what these central bankers may or may not do. But they did an intervention, back here in late December, and it certainly looks like they're serious, and it certainly looks like the market's taking them seriously. So that what I like to do is see how the price absorbs the information rather than trade the information. I don't know if that makes sense. So if I'm looking at a market in a certain way, I want to see that the news is corroborating the way I'm seeing it. And if the news somehow starts taking this market up, then I've got to be open to the fact that this is going to be a broken pattern, that the way that I was looking at it is not going to be confirmed, and that's fine. Because if it is a broken pattern, then I know how to trade that. And that actually, when patterns break, they break serious, and that gives me an indication and a way to look at the markets that I can make even more money. So whatever they do, I'll just read it within the context of the way I look at price action and patterns. So thanks for that question, Monica. Any other questions before I get off, because I've got to write up the the signals for everybody else tonight. I will send out the video if you didn't see it today on Sunday trading. Again, just a reminder, I just stay away from the first 3 hours on Sunday. Go and enjoy the football game, and stay away from that head fakes and those noises. Monica, you're welcome. Anybody else? I'll wait. I'm always on like 30, 45-second delay here. So if I don't hear any more from you folks, thanks for attending today. Hopefully it was another worthwhile session, and we'll look at some the trades tomorrow, and hopefully we'll make some more pips between now and then. AT, thank you for that compliment. Kaz, you're welcome. Sergey, you're welcome. AT, I think it was you who said you were up 10% using 0.5% risk, if I remember that right. If you want to take your name off or whatever, just submit it anonymously. If you want to show me a snapshot of your account, that would just be excellent to put up as an example of how you can take my trades and still make a lot of money using prudent risk. Trent, you're welcome. George, you're welcome also. Don, Dex, Naveed, HP, you guys are always welcome as usual. It was a great session being with you all, and we'll see you tomorrow. Thanks again. Bye-bye now.